What is a credit score and how is a credit score calculated in Canada? I'm going to explain it to you right after this. Hello and welcome back to my channel. My name is Patrick Fields, Edmonton real estate guy, and I'm licensed with RE/MAX Select. We always hear numbers thrown around when we're talking about credit score, like, oh, this person has a 500 credit score or this person has a 750 credit score. But what does that even mean? What is a credit score and how is it calculated? Okay, so first off, what is a credit score and why is it helpful? A credit score is a number based on specific information on a credit report. A credit report is used by lenders to predict the likelihood that you're going to repay your future debt. Your credit score changes frequently and each lender decides how they interpret and use your credit score and if they will lend you any money. Okay, so what does a credit score mean? A credit score is a number which can range from a low near 300 to a high of 850 or 900. This will depend on which company is calculating that score. If someone's score is 580, it means that 580 people out of 850 are likely to repay their debt. If someone's score is 780, it means that 780 people out of 850 are likely to repay their debt. It's a little confusing. The number represents the odds that a lender will get the money back that they lend someone. The higher the number, the better the odds. Okay, so we know credit score can go up to 850 or 900, but what are the 5 key factors in calculating and determining your credit score? A number of specific factors go into determining a credit score. These factors are based on what someone does or doesn't do with the credit they already have available. And this is why credit score changes frequently. Here are the 5 factors that determine your credit score. Representing 35% of your credit score and the biggest factor is payment history. Your payment history is the most important factor in your credit score. Now obviously, before someone lends you money, they want to know if they're going to get it back. Your payment history reflects all the payments you make to all your consumer debts. Creditors report every time you make a payment to your credit cards, line of credit, a car loan, personal loan, student loan, cell phone, and any other regular debts that you have. Interestingly enough, mortgage payments are not reflected on a credit report, but almost everything else is. The payment information that is reported shows separately for each account that you have. It shows whether or not you've paid as agreed. It shows if it's a deferred payment or if payments aren't currently required, like for a student loan. How many past due payments you have, how often your payments have been late, if you have any debts in collections, and if you have any negative information in the public records portion of your credit report, like bankruptcy, judgments, liens, and others. Your credit score also reflects how recent any late payments or collection activities are. The older the information gets, the less it will impact your score. This is where time and good behavior are on your side. The next factor to get to 100% of a credit score is how much is owed, and this represents 30%. When you apply for credit, how much you already owe really matters to a lender. Your current payments will determine if you can manage any more payments in your budget for the additional money you borrow. Makes sense, right? If you owe more money than you make, why would anyone lend you money? While you might think that you can actually handle more credit, statistically speaking, there's a chance you might not be able to. If you're close to maxing out all of your credit cards or your line of credit, it means you're a higher risk to lenders. High risk to a lender means there's a greater chance that you won't keep up with your payments and not pay them back. Another aspect of this part of your credit score reflects how much of your available credit limits you use on an ongoing basis. If you usually use 60% or more of your credit limit on a credit card or line of credit, it will impact your credit score negatively. This is because if something were to happen to your income and you owe a lot of money, you'd find it very difficult to make the payments. The third factor is your length of credit history, and this makes up 15% of the total. If you've had credit available to you for a long time, your credit report should provide an accurate picture of how you use credit and if you ever had to get through a difficult time. For someone who has not had or used credit for a very long time, it is difficult to tell if they really know how to use credit responsibly. Your score will reflect how long it has been since you first obtained credit, how long each item on your credit report has been reporting, and whether or not you're actively using credit right now. If you've recently obtained credit for the first time, your credit score won't be very strong. However, if you have been using credit responsibly for many years, this factor can work in your favor. If you've been involved in a bankruptcy, consumer proposal, orderly payment of debt, or debt management program, your credit history will essentially restart whenever you complete your program. Most information will be automatically removed from someone's credit report after 6 to 7 years. This isn't an overnight fixable situation, so the only way to keep a credit report active is to use your credit, even minimally, on an ongoing basis. Nearing the end, new credit applications make up just 10% of your overall score. Frequently applying for new credit can signal financial difficulty. In the industry, it's called credit shopping, and it doesn't reflect favorably on someone's credit score. It's not unreasonable for a creditor to worry about how often someone applies for new or more credit, because essentially the more new credit someone gets, the harder it can become for them to keep up with all of their payments. This part of your credit score takes into account the number of times your credit has been checked in the last 5 years, the number of credit accounts you have recently opened, how much time has passed since you opened any new accounts, and the time since your most recent credit inquiries. This part of your credit score will also evaluate whether or not you're reestablishing your credit history following past payment problems. And representing the last 10% is the types of credit used. Now, even though this part of your credit score makes up 10% of the total, it's the least significant part, unless you don't have much other information on your credit report. Different types of credit shed light on how you handle your money overall. For example, deferred interest or payment plans can indicate that you aren't able to save up for purchases ahead of time. Consolidation loans mean that you've had difficulty paying your debts in the past. A line of credit is a revolving form of credit, like a credit card, and it's easier to get into trouble with a revolving form of credit than with an installment loan, where you make payments for a set amount of years and then it's paid in full. If you focus on managing your finances wisely and only apply for credit as needed, this part of your score should be able to take care of itself. The factors outlined above are calculated slightly differently by the two credit bureau companies in Canada, Equifax and TransUnion, and it's up to each lender to decide how they interpret and use credit scores and credit report information. As such, the factors above are not the only things that are important when you apply for credit. Lenders will also consider factors such as your income, your assets, how long you've been at your job, and the reason why you're applying for credit. Is knowing your credit score important? Some people really want to know what their credit score is. They might even brag about it. However, it changes often, so be prepared. Also, keep in mind that your credit score is intended to reflect the likelihood that you will repay any money that you borrow. Focus on managing your money carefully with a budget and only apply for credit that you need, and your credit score will take care of itself. I made another video that talks about how to fix your credit score and how to get a copy of your credit report, and I'll post a link to it right up there. If you have any questions, just give me a call, you can send me a text or an email, or reach out to me on WhatsApp. Thank you for watching, stay safe, stay well, and I'll see you next time.